Welcome to TradeTheNBI.com. This is Jonas Reporters for the 11th of October. Well, coming off that nice little spike move, but we were below the 50% again. We attempted the 50% and it got rejected pretty firmly. And you can see white NBI spiking above and the magenta moving lower. So coming off of what traditionally would be pretty decent buy setup from a DOC as well as rising shakeout. Poses some challenges, not to say that that's a finalized reading from it, because intraday that can actually change. But again, it's clear for us that 50% level certainly represents the key flipping point, and that's at 4,400. So, I mean, at that point, from a daily standpoint, being long above that makes the most sense, particularly at that point we should see a change. The fact that steel keeps riding up there at that 9 level, that's fairly elevated. So any dip in short-term buyers and a move back down is clearly in the cards. So from an NQ standpoint, a little bit different. You see the red rising above magenta on the NBI, and that in this particular case, though, when that red leads on a spike move, particularly like this, often short-lived from a bullish standpoint, and again, much further away from the 50% on the NQ, so that 38% becomes a level at 14,876. So similar scenarios, just different levels for the two markets. And that's going to be an interesting one, because further pressure within the NASDAQ certainly weighs on the S&P, considering how heavily weighted it is towards tech-heavy stocks. From a euro standpoint, again, euro's just hemorrhaging, just gets worse and worse for what the eurozone's trying to do, and the power situations. Energy is just a nightmare scenario, and it's of their own making. So this is just a progression within that, and that just makes it tougher for the Fed, because to try and bolster that when you have so many moving into the dollar, which is exactly the opposite of what people expect, and it's just simply because you're going to have to buy commodities in dollars, which means you need those dollars available to buy the oil as that price continues to rise. And that doesn't look to abate anytime soon, because of the supply restrictions. And this is where the supply chain disruption we talked about so many months back is starting to play itself out, and it's irrespective of the whole China breakdown in the supply chain and what we're seeing coming out of there, and how things are melting down much faster. And this is the way it always happens with systemic problems. I mean, even the market valuations that we've talked about, once the breakdown begins, it accelerates at a much faster pace than anyone can imagine. You would think they would have learned this by now, but patterns always repeat, which is why we're so successful with our setups. This is critical. This is TLT, so this represents treasuries. You get rising yield taking place within an interest rate environment that the Fed says isn't going to move, and the market is moving it regardless. So that's pre-anticipatory. This is no different than what we had recognized from the Bitcoin setup almost a year plus as futures, and that were created to trade it, and that left it for big players to utilize for both hedges long and short. And the reality is, we showed from our strategies that the short side makes considerably more than those people who were buying and holding Bitcoin long and those setups. And of course, they use it to park reserves as necessary. The value doesn't really matter as much because they're able to manipulate that back and forth. So where it is numerically really becomes less important than the moves that they're able to create within it. It turned into a cell configuration for ours. What was that? Up at 54.7, and it's not 54.3. Not huge. But of course, the future setup just opened for that. We should take a look at the 50K, because what you're seeing here on the dots, and we can get into that a little bit fun. From a 50K standpoint, you can see that something I've talked about repeatedly is the diversification doesn't necessarily need to be in stocks as much as it can be in time. because that's another additional element to it. And so this is where the difference between the SP, MBI, and the GAM trading out at different stages. The SP taking a more conservative approach as soon as the signal, and the GAM anticipating that when we've had this significant move, that it's just going to trade across with the potential for going higher, but it closed out when there was no resilience to the pause, and took it out just a little bit different. So 87.50 versus the first exit at 96. And another place that will reflect potential for the higher move, and it would keep capturing that. But I wanted to point out what the dots are going to suggest for us, and this was a topic that we had discussed where we get spikes of the MBI white. Obviously gives us the projection of dips back to the zero line, but only after magenta has made a finalized move, or is in most cases continued down, and we get the white moving back above red. Well, when it proceeds like this, you don't get that signal until much later. But what this dot setup is the magenta recognizes spikes of magenta that are initially over the 37 level. So this was the original spike, and it recognizes it once it pivots lower. And that becomes the signaling point. So as long as that signal is active, meaning it's going to be within X number of bars and within our inputs, I can show you what those inputs look like. That's the easiest way to do it. What they come into is we have opportunities to adjust the number of bars ago, as well as what that value of the magenta right here. It starts at 37. How many bars that it allows before it actually is able to trigger. And if it eclipses those, then it doesn't do anything. In this particular case, what it's looking for is a move of the magenta below 33 and a level where white is at least above 5. And those become variable inputs that can be changed based on chart type. But in general, very reflective of exactly when the scenario. Now, then we have a couple of exceptions where, of course, you have TSC cyan riding under red, which is always a buy, except for those unique setups where right about usually there's the couple of them. One where the steel will come above and then right back below. That tends to create a little bit of weakness, but also where, like in this case, green dipping below the cyan. And that forms that little chartreuse. Now, that isn't always the optimal setup, because within a up run, you could have a momentary pause where that takes place, and then the cyan returns back underneath. So it becomes a little more caution. What the full trigger is, though, is the darker magenta right there, which happened to be exactly where that cell was. Doesn't always happen in those cases because back here, where it came right at this particular level. And a lot of times it does coincide with our crossover, but there'll be plenty of opportunities where, like over here, we ended up with cyan underneath, and then it triggered at the same point the dark red did. But there'll be times where it'll appear before white even crosses red, and that will be an advantageous situation because it just allows us to capture it a little bit earlier. We'd have to just scroll back in time, and you can see some of those additional setups. Where it doesn't do anything is when price dips below that 38%, you get no triggering signal. And where that becomes interesting is when you're below those levels and you have the marker, oftentimes just the dot itself becomes that triggering point to take advantage of it. In this case, back here, when it first triggered, it was still under red cyan, and then the crossover happened right at that peak, which is perfect entry. I mean, when you look at it from these standpoints, it really is capturing exactly what we want to see. And that'll be modified into the cell setups, and these recent ones doesn't make too big a difference, but what it does on some of the other ones where we get a decline in price, it'll capture it a little earlier when it's more of a rapid decline. the same principle applies even within the 5K. This was something we were talking about. Price was heading up. We had the magenta spike, and it was slightly above, and I went ahead and started entering gold position early there in anticipation of that eventual rollover. Because when you do get to a situation where you're nearing 50 on the magenta, those rallies just they fade out pretty quick. And in this particular case, you had the green, but then the magenta. Right at the same time, we had our violet candle, and it was at the same time that we had the crossover of white over red. And in this case, though, when white crossed back below, you just had a continuation sideways, which started with one of those cyan moves under that really isn't great because you have red dipping, and then also cyan just happened to dip slightly below, and then triggered literally right after it. So one at 91 and a quarter, the other one was 90.75. But even as the peaks were happening, we knew that we had the white spike here as well, and literally as the market started to close, just cascaded lower and filled the move down to the 0% from that original white spike setup. So ideally worked perfect. You'll see plenty of these setups that take place right at these conjunction points, but earlier than the full sell signals that we've had before. So on some of these little shorter drifts in between, it'll capture it a little bit earlier for us, which I think is helpful in a lot of ways, like particularly when it's softer like this. And certainly you can get turnarounds by the time you wait for the full red candle. You're already, getting near towards the end of the move. And literally what this looks for to end those magenta dots would be any dip of orange coming down below the 7.5. Usually negates it for several bars after that, simply because it's usually when that orange is rising that you're right in the middle of a new setup that's just beginning. And but I've sent this out on the Skype chat, so everyone can take a look at it and have an opportunity to review it. This under the catfish head on. Some of the inputs that you just saw in mine probably won't be on that latest version, but as soon as I've completed some of the additional setups, I'll send out another version that will have additional inputs in them that will allow you to make adjustments and even adjust for the pivot height. Because as you get into smaller time frames, these tend to move a bit more dramatic than lower time frames like a daily. So a pivot on the daily, much lower, may be all that's required to still produce the same effectiveness. And this will be used in the NVI paint bar is what I'm converting it into. And it'll reflect basically effectively like what we would look for from a trade standpoint. So I think that'll be very helpful, very exciting to see those possibilities develop, because then once you've started, you can certainly see that you move into orange dots. So you know you get continuation, and then of course the yellow as well. That's the long and the short of it, the excitement of all the new things that are developing, and just makes it a little easier visual with those dots, and once I've matched the paint bar to it, that'll be a cleaner setup. In this particular case though, once that trigger goes, until you have some type of new signal, which would be that orange dipping below red or a turnaround in DOC red, it would stay red throughout, even in that rare case where you get that tiny one instant blip under red DOC, but it falling red MVI, DOC. So not exactly a scenario that you would look to for continuation upside, and certainly confirmed itself the next bar with that crossover of the white and just cascaded lower. So that's all part and parcel of understanding how that construct was created, and certainly I think when you look at it, you'll find out extraordinarily effective, particularly in that 50K and even from an intraday standpoint. As always though, trade well. We'll talk again later, and I'll be able to answer any questions on Skype chat.